It's all people. There's nothing without people. In private markets, you have the decisions around when you buy, and then when you exit is really not your control. Company goes public, someone buys them, they go bankrupt, whatever it might be, right? So the real decisions come on are the millions of decisions that the CEO and the team make along the way.
AI is reshaping software development faster than any of us can track. The New Default is Montreal's research and media series built around one question. How is AI actually changing the way we build products in practice, not in theory? We're talking to investors and founders and builders and researchers living through this shift. No hype, real insights from professionals for professionals. Today we speak to John Frankel, founding partner at FFVC. His fund has an unusual stat. Half of their pre-seed companies reach Series B. Industry average is around about 10%. And 13% of their portfolio companies hit around about 100 million in revenue. The industry average for that is under 1%. So when Frankel talks about what makes companies succeed, he's got some solid data here. It's not technology. It's not the marketing team. It's not the market timing. It's the people making millions of small decisions, tiny little course corrections every day.
I think we're the only VC firm that has an office in Warsaw as well as New York. And about 5 years ago, we set up the Polish office because we felt when they continue to innovate, that both Warsaw and Dublin intrigued us as emerging centers for growth. So, we like Poland because it is relatively large in Central and Eastern Europe, growing rapidly. It will soon eclipse GDP per person, eclipse the UK. And to understand how dramatic that is, it's grown like 20-fold in 30, 40 years. It's enormous growth. New York was a really interesting emerging tech hub. Today it's rivaling Silicon Valley. I think it's eclipsed Boston in various areas. But back then it was an also-ran. And the whole community built up, and it had a number of features that really helped its growth. New York's interesting in not just its density. It's around '08, social, local, mobile, solo mo was a big thing, and the density of New York was very important. But also, there are headquarters of pretty much every industry in New York. And as we move into this AI cycle, the institutional knowledge in those companies becomes very useful if you're doing an AI startup. So it really just brought a number of things together. But we found the Polish folks to be amazing people to work with, very driven, very capitalist.
Frankel's portfolio tells a specific story, not moonshots, not pure AI plays, real businesses using technology to solve tangible problems. Take Manna, the drone delivery company he backed before it was even legally formed. 7 years ago, everybody said it couldn't work. Too many unknowns, regulatory hurdles, consumer adoption, safety concerns. But FFVC focused in on something different.
So if we look, we've been around since '08. So we have a ton of data. And, we've seen that about half of our pre-seed funded companies get to a Series B. The industry average based on Preqin is about 10%. We've had 13% of our portfolio companies become centaurs, get to 100 million revenue run rate. I don't know what the industry average is. We think it's sub 1%. So I sat down with him, a guy by the name of Bobby Healy, and sat down for about 40 minutes. And I said, after about 40 minutes, I said, Bobby, I got a big problem with what you're doing. He goes, what's the problem? I go, well, you're doing last mile drone delivery of food, right? You got these drones and they're going to pick up food from somewhere and you're going to ship it to people in their front yard, backyard, driveway, whatever. I go, I don't know if you're going to kill people. I don't know if a consumer wants to adopt. I don't know if the economics work. I don't know if you can become effectively a regulated aircraft manufacturer. I don't know if the regulations are going to let you do this. I don't know if it's too noisy. He goes, hold on a second. He said, you have one problem. I go, I do. I go, my problem is, I think you can solve all of these problems. And I think you're uniquely placed to do it. But it's a heavy lift. You know, today they've done something like 250,000 in production flights, contribution margin positive. I think they're the only last mile drone delivery company in the world that's contribution margin positive. But I look at this and I go, if this works, it is a multi-$100 billion revenue business. All right. The TAM is just massive. And I think, 7 years ago, we had the view that the skies at some point will be filled with drones because the economic imperative is such that it will crush regulations and people not wanting it and this and that and the like. Your average burrito takes 28 minutes to get to you, and it costs between $8 to $12, depending on whether they're delivering other people's burritos at the same time. Drone delivery can be 4 minutes kitchen to table and sub 3 minutes in the air. Which means your French fries arrive hot and without someone having taken a few on the drive over. But also, the cost of delivery today is down to about €4, and we think it can get to €1 at scale. And that is, at €1, it's 1/10 the price. At 3 minutes airtime versus 28 minutes car time, it's 10 times better. And what's fascinating for me is the addressable market is not even understood. What do I mean by that is today people order food and maybe some groceries delivered and stuff, but it's expensive because someone has to make money somewhere, and so it has to come out the consumer's pocket. And it's time consuming to find the slot and this and that. When you make it just frictionless and cheap, I think the TAM goes up 2, 3, 4-fold. Right. And by the way, drone delivery is not great for rural, and it's not great for dense cities because there's no, you're flying over a lot of people. And so that makes the risk higher, and there's nowhere really to land. But the 80% of European or US population that lives in this sort of city edge suburb kind of space, that's where it's ideal.
Drones or fintech, AI, the sectors change, the tech changes, but the pattern doesn't. When Frankel looks at what separates winners from failures in his portfolio, he comes back to the same answer every time. It's not the market, it's not the tech stack, it's something that you can't automate.
It's all people. There's nothing without people. Think about it this way. When you invest in a public market stock, you have probably 2 decisions. Price you enter, price you exit. Right? Those are your 2 decisions. Do I buy? Do I sell? And then the company executes, does whatever, but you have that ability. In private markets, you have the decisions around when you buy, and then when you exit is really not your control. Company goes public, someone buys them, they go bankrupt, whatever it might be, right? But the defining aspect of the value within there, so you can't control by saying, I think things are going wrong, I'm going to sell my GE, I'm going to sell my Apple, whatever it is, right? It's buy and hold. It's the ultimate buy and hold. So the real decisions come on are the millions of decisions that the CEO and the team make along the way. But if you think about it, the biggest thing you control for are the people making those millions of decisions. So it's the quality of the team and the decisions they make. And so the idea may pivot, the idea may expand, the idea may stay the same over time, but it's the team that you're backing out.